David here with his weekly week look. Today is 28th of June, Thursday evening, video going out about 5 o'clock. So we're looking at the UK London wheat market for November, and we've got the closing price at the moment of 171. This is the daily long-term bar chart. And as you can see from my last two videos, especially last week, I was calling this basing pattern here, looking for a breakout. First target here was 163, and then obviously ultimate target here was up at 171. And as you can see, the price here, as making this video, we've hit exactly 171, and we've got a gap fill here that was left in this time last year, in June of last year. Right, so where do we go next? The first thing I'd like to draw attention to is firstly that we have got a gap left down here on the breakout at 156, so that needs to be put in our diaries, because sometime within the next year this price gap will be filled again on the way back down. So we always have to note that there is going to be filled, the same as this here above us was going to be filled at some time. Coming back down to a lower time frame, you can see here this consolidation pattern we were seeing last week. Typical, you know, what I've seen before, the longer in time, the higher in space kind of pattern here. We had the breakout, had this jump here through the over the top of the moving averages, and we've got up here to hit our target. So where next? Let's just try and get some numbers on this. I've just overlaid this previous chart we just looked at with an Elliott wave, and if we take the wave 1 was the start of May, a low of 146 up to 163, that gives you a move of £18 a tonne. We then saw this pullback at the end of May, beginning of June, down to support here at 154. We saw the basing pattern first half of June, and then we've seen the rise straight up. Now this is called wave 3. Now wave 3 of Elliott wave is always the explosive wave, which obviously we're getting at the moment, and obviously a very high impact wave. Now we can put some numbers on this, predict this wave, and at the moment we are looking for wave 3 of a move of £55 a tonne. So then you add this to the bottom of wave, the B here, 154. This gives you an ultimate high target of 209. So what the principle is, that basically that as long as this top of wave A here is not taken out, then your target is still in place. The top of wave A is 163, and that's where we're looking at. We have got another intermediate target. Our next upside target is 181, and that's predicted from the Fibonacci from the recent move, and then obviously we're looking at 209 for our ultimate target. But obviously, you know, with any explosive move like this, the market is highly overbought, and we need momentum to keep it going. So you could see some retrace pretty quickly, you know, without any warning. You have got a highly volatile market, and this move is only in play, as long as this now is not taken out at 163. But obviously, if everything's, you know, keeps going, momentum is there, then obviously look for those two upside targets. And I'll put an update this time next week. Thank you for watching.